Hi folks, welcome back. This is the Monday, August 9th, 2021 commentary. But we're looking at the euro dollar here, the daily chart. Next level of liquidity here, and ultimately the draw on liquidity there. Okay, so far we've had a continuation on Monday, reaching into the sell side liquidity here. And do we need to come back up in to that range here? I don't believe we need to, but this is the next draw on liquidity on the near term. On the hourly chart, see we traded back up into this little fair value gap there, taking buy side liquidity out there, and then repricing below the short-term low. These relative equal lows, we'll look at that in lower time frame. Let's drop down to a 1 hour chart zoomed in. There's that fair value gap there and the respective levels. And on the 15-minute time frame, euro dollar, see we traded up into that fair value gap there. Breaking market structure. You'll see that on the 5-minute chart. Trades below the short-term low here, and then relative equal lows there. A little bit more lipstick on this. You can see the fair value gap, traded up into that, taking buy side liquidity out. Small little fair value gap there in the shaded area. So we had a break in market structure here. Return back to rebalance here. Displacement. Institutional order flow entry drill as trades right back above this candle's high there. Aggressively runs below these lows and the old daily low here. So look at how many times we've taken out a low here. We did this low there. This low was taken out here. And so far we haven't taken out this low yet at the time of this recording. But ultimately, on a lower time frame intraday study, 5-minute chart has still operated as we would expect price to deliver. But because we're in a slow day, the lower time frames are the only ones that are speaking with elements of precision. The institutional order flow, when it runs up above the short-term high here, when it runs into that, it's allowing traders that are anticipating a run below these lows, below this daily low, in a more meaningful way. It's more range below that old daily low. This gives them the opportunity to get short if they weren't able to get in up here. So you had this level here, optimal trade entry here, another optimal trade entry with this swing here, and then another run into optimal trade entry that's linked to this high short-term low. Multiple passes in here, and even this is an optimal trade entry. This high, low, high. You can see that on the 1-minute chart when you're in study. The displacement breaking below the short-term low, coming right back up in. Measure the open to low here. Consequent encroachment. Institutional order flow entry drill. Sells off. For those of you that, which is the majority of you in mentorship, you all received a video on Saturday. And that was the only video apart from Wednesday's midweek commentary. I didn't do a video on Thursday. I didn't do a video on Friday, not on payroll. And I already mentioned and told you the whole jawboning about why this week needs to be dialed back. And on the Saturday video, I inadvertently forgot to do one user group. And they are 7E. And you know who you are. It's about 92 people in that user group at the time of this recording. I did not put your link up on Saturday. So as soon as I made a comment on my YouTube channel stating basically what you're seeing here, making reference to gold, I said that I'm on record on Saturday talking about how we could see black swan events and flash crash, that type of scenario in the markets. Now, while I didn't point directly at gold, I find it interesting that the very next day, when the market week opens on Sunday, we have a flash crash in gold. So I got emails. My staff was telling me, hey, we have members from Group 7E that are reporting that they don't see a link. So I went in and checked the forum, and sure enough, I did not post for that specific user group. I'm embarrassed. Apologizing now because those individuals that were in that group obviously didn't get to see the video like everyone else did. So it wasn't that big of a deal of a video, but it kind of falls on the members that weren't able to see it on Saturday, where I mentioned these type of events or conditions, and then we have it occur actually on Sunday's opening, and gold just completely falls out of bed. So while it's not something I actually traded, it's not something I actually called very specific in terms of that market, the conditions is what I was kind of drawing your attention to. And right from Jump Street on Sunday's opening, we get it on gold. So I want to talk a little bit about that, but just to remind you, we have not left this environment. It's just every week that goes by, more and more risk increases in these markets, and it's going to be basically used as an excuse that there's no liquidity. There's no liquidity, and that's not true. There's always liquidity. Okay, and they're going to skip over a lot of the liquidity by repricing aggressively, higher or lower. Now, I'm not drawing any specific reference to any one particular market or asset class. I'm just basically raising the alert that we are really in times that could eventually see market swings that are not tradable. Now, gold was tradable, but we're starting to warm up, I think, and that means we're going to get people caught on the wrong side of the marketplace, and horror stories are going to be a result. So I'm not trying to scare you, like I mentioned in the Saturday video. I'm just trying to be a voice of reason to just tap you on the shoulder and say, hey, look, if you're usually risking a lot or risking over 1%, now it's not the time to do that. Okay. So with that, let's carry on with our discussion. So you see here we had mention of flash crash in the first four reference points here and the news headlines. And all I did was this, went to google.com and entered gold flash crash and all of the major headlines that popped up here. So again, this is some of those things that you get when you're under the tutelage of someone that's been doing it for a long time and you know what's likely to occur. And while I'm not patting myself on the back, I'm not looking for any specific credit. I'm not looking for attaboy ICT. I'm just showing you that this is right on time with the message I was giving you on Saturday. So I want to try to do my best to keep you all from trying to engage in specific market moves that may result in an adverse result. Because I don't think that the new group that is here is seasoned enough to understand the level of risk for the folks that's been here since 2016, 2017, 2018 and such. You've been with me for a while to know that I'm pretty good in terms of knowing where it's likely to give us a landmine field. The 2021 group, they don't have that experience yet. So I'm grateful that this result in the gold market in one day, smashing down like it did, was hopefully a sober reminder that, you're in good hands here. And I'm trying to protect you first and foremost, because if you're staying in this business long enough, you're giving yourself a chance to make it. Too many people come in, even in this mentorship, and they try to trade with live funds because they either can't afford to be here or they're just hungry to make money and they don't want to listen to the process that's required to adhere to. And they just make their own rules up, and those rules never work. Okay, so let this be a testimony to what I'm referring to now, because it's just going to get worse. There's going to be big displacements and probably much worse than any of us would expect. So you have to be careful. And the only way you can really weather that is keep your risk extremely low, 1% or less. Don't trade a whole lot. Really look for your cherry setups. Just go in knowing what it is you're looking for. And if that choice setup appears in the chart, engage it with low risk. Be nimble. Take your profit, whether it be demo or whatever, and then move to the sidelines, and do not be in a hurry to take another one right away, because that feel-good moment is very addictive. And you don't want to have that in this climate, because even I can be apt to be wrong more times than not in this environment. So I'm trying to elevate the level of attention to that likelihood. So if I'm telling you with almost 30 years experience, I could probably get it wrong in this environment, it should be pretty easy for you to assume that it probably might be a little bit more difficult for you too. Okay, so just tossing it out there for no extra charge. I may be making an error here in my remembering of my comments about gold, but the 20th of June 2021, that video does talk about how we're likely to go down into those relative equal lows seen here in the earlier part of 2021. Those right here. And I liked this fair value gap. One of the ideal scenarios I was looking for was if we could trade down through it and come back up as resistance, and then I'd set that as a target for something with that narrative in play. We had this imbalance in here, and I watched the recording, and while I had my mouse here, I was drawing the attention with the mouse, I was too busy talking about something else. But you all know when I say it might take a little bit longer to get back down into these lows here, I don't really make it clear about going up into this area here. But you know that this is one of those things you would look for. You would look for this area here to be revisited, and or this one here. And for whatever reason, I have a memory, and I don't know if it was me talking to my sons or if it was in a commentary, and I just don't have it included in the description. And I'm just going to side with that. Maybe it's just, I just didn't include it in. But one of the scenarios I had in mind, I was looking for, obviously, coming down, filling in this, and then trading up to here. I wanted to see that scenario as one. Or if we went down below it and came back up in, that would be a sell to get down in here. That's what I had in mind, even when I was discussing gold on the 20th of June 2021. But in that recording, you don't really hear me say, at least I skimmed through it, I didn't really hear myself talk about going back up into this area here. So in that respect, I'm a little disappointed because I thought I had that in recording. But nonetheless, even with those scenarios not spelled out, the attention was drawn here, and you know enough to anticipate this level, consequent encroachment, or the premium high of this SIBI, and this level here as well. What I find interesting is how it went from going into the fair value gap here, not completely closing it in, rallying higher, going into the SIBI, trading down here, picking up what? A rebalance here. All of this fair value gap extended out in time, it's reaccumulating in there, and then sends it right back up to the discount low of the SIBI. So that's 1, 2, and then 3 times it trades up into that. Then a dramatic repricing lower. Notice if you look on the daily chart here, it doesn't look like it took out this low, because for whatever reason it's not showing Sunday's data. And when we drop down lower time frames, you can see here the 15-minute time frame. Here is the beginning of Sunday's trading, the new week. We open, small little rally, and then boom. Folks, this is a lot of movement in a very short period of time. If you're trying to trade long, and I'm not suggesting any of you were, but imagine if you were long, okay, and you didn't want to have a stop loss on because you thought that you didn't really need one, or you could have time to close the trade if it was moving against you adversely. This is one of those instances where that can kill you. Okay, it can immediately remove you from this industry, and you really have no answer for it except for regret. This is a 5-minute chart on gold. That repricing is aggressive. And you can look at the silver market too. The silver market did the same thing. Now, $10,000 moves in minutes. I'm not sure if you are accustomed to something like that yet, even if you have been here since 2016. So if you're offside without a stop loss, which none of you should be in here doing that, but you see a lot of that on Twitter, you see a lot of that on Instagram and YouTube. And this type of move right here will clean your clock if you trade like that. This is exactly what I was referring to in Saturday's video, and worse. Like, this is kind of like a muted version of what I had in mind, but it's already started. As soon as we opened the week up, we had this right here. So you can see also that we traded below the old low. Let me go back up to the daily chart here. The red line is that low here. You don't see it crossing over on the daily chart, but on the lower time frame charts, you can see that we did trade through it. And on the 5-minute chart, obviously it smashes right through that. And then we rebalance almost basically 95% of all this. It comes back up in, and then it's then slowly drifting down away from that. I would not be participating in gold. It's highly manipulated, and folks want to believe, and you see it all over YouTube, all these economic reports, these pseudo-intellectuals, these truthers are coming out saying, you know, buy silver, buy gold. It's the only hedge against what's going to happen. This, to me, is them trying to scare everybody from wanting to be in the gold market long. So if they're doing that, that to me falls in line with what I've been anticipating. The powers that be, okay, central banks, are going to do whatever they can to try to remove any possibility for any of us to find a income stream. So they're putting pressure on businesses, they're putting pressure on countries, they're putting pressure on the middle class in the US here, while the government's saying, we're not going to mandate that you all get a vaccine, and or you do this, you do that. They are incentivizing the companies to do it. So that way, well, we didn't really do it. We've given the power and authority, and we're kind of like encouraging the businesses to require vaccination for you to be a patron or a visitor. And that's going to be harshly rejected by the United States. There's a lot of folks that are not going to take this vaccine. They're not going to take it. They don't want to take it, and they don't want to put a mask back on, and they don't want to do this, and they don't want to do that. And it's coming to a head. Businesses are enforcing their employees, requiring them having this vaccine, and I have friends and family that are saying they're ready to quit their job. That will be met with probably a denial of benefits if you try to go for unemployment. That's what I'm anticipating, expecting next. And they're slowly tightening the noose, is what I'm getting at. Okay, and trading is not exempt. It's not going to be one of those places where, well, yeah, you know, we're going to let, you know, those individuals that want to risk and gamble money, they can still make their money there. They're going to manipulate these markets soon. Okay, this was here, one instance of it, but it's small. And the way I interpret that is they've begun. That's what I see here. I see them signaling that they have now begun their whole process of now they're going to start messing with the markets. Now, when you hear this as a new student or a new trader, you want to quickly run to the far edge of the spectrum and say, the algorithm is never going to work again. Trading is never going to be able to be a viable income source. I'm anticipating a short period. How long is short? I don't have a definitive amount of time, but I anticipate maybe 6 months, maybe even up to a full year of not being able to trade efficiently, safely. Not that there is any real safe trading because there's always risk, but I'm anticipating very difficult market conditions because that will be used to scare the average person from putting money into an account, because moves like this, I guarantee you, has destroyed a lot of retail traders. They can't weather something like that, especially if they don't have a stop loss, which is like 80% of retail traders. They don't want to put a stop loss in because they don't know where they're wrong. And if they're not able to know where they're wrong, they're not going to put a stop loss in because they think, hey, I'm going to gamble. If I hold on to it long enough, it might move in my direction. And they don't even have a target. So that's pretty much what I'm anticipating and going forward. I see this as the call to arms, if you will, to let everyone that's in the know anticipate more of this, but more ferocious, more vicious, okay, price swings that are not tradable. And maybe both directions, whipsaws, like up, down, and just clear the board. And they'll say it was a lack of liquidity. And that's what the excuse is going to be. But it's not a lack of liquidity. There's always liquidity out there. How far they're going to reach beyond the open float, above and below the marketplace, that's an unknown. And that's the reason why I told you on Saturday, and in other instances in the past where I've been teaching about this environment, when it creeps in and it shows its signatures, and what's the signatures you're probably saying? How did I know? Okay, that's the question you're probably having. What tipped me off that this is probably going to be what we see, black swans and things like that? Well, we're in a classic time of the year, the summer. We are in an unprecedented time around the world. Every country is having upheaval over this whole vaccine mandate, and people are just fed up. And we all know that they're likely to put the clamp down again, and this time they're not going to do it the 2.0 light version. It's going to be harder because they want to break the backs and necks of people like myself, where I'm just not going to comply, and I don't care what they think. I'm not going to do it. So if we take all that into consideration, and I know some of you in here, because some of you did send me video links and such, if you are against the vaccination, ICT, take a look at this, because the Delta variant, listen, I'm not going to be swayed, okay? And I mean this with all due respect. You paid for my opinion and understanding about the marketplace. In that, I have to give you why I feel the way I feel and how I'm internalizing price. And that's why this is in the videos. Some of you may not want to hear these types of things because you are opposed to this. Maybe you're 100% vaccination, in agreement. Maybe you have the vaccination, whatever, okay? I'm not trying to make you anti-vax, but I'm not going to change who I am and what I believe in because you don't agree with me, no matter how many of you are. And believe me, it doesn't look like there's a whole lot of you that think that way. But as much as I respect your view and your opinion, because you're entitled to that opinion, you're entitled to put whatever you want to put in your body. You raise kids. If you want to put this stuff in your kids and let them do that, hey, who am I to say you can't? I'm just saying I'm not. I will not. I had a child that was harmed by vaccination, so you're not going to tell me that I'm foolish. Forget about it. And I have friends, personal acquaintances, and old relationships that are now buried. And I'm older than they are. They were in really pristine health, but they took it and they're dead. Okay, so I include this, and I'm answering basically the few people that did send me an email about this. I don't want to hear about this stuff in the mentorship. I didn't pay for this. Well, actually you did. You just don't want this part in there because it doesn't agree with your views. And that's fine, but we're adults here, and I have to be honest with you. What builds my understanding or opinion about a current market environment, these are heavy-hitting factors. So for you to close your ears or say, I don't want to hear this part, you're really getting an incomplete perspective of what it is I'm doing when I'm looking at the charts and why I'm anticipating certain things. Which leads me to something else I said in the video where I talk about how everyone knows about the equal highs, equal lows, and how they run for those. And Calvin, I think I've answered this before, but I'm going to answer it again. And for anybody ever having this question come up or arise in your concern, the fact that relative equal highs and relative equal lows being attacked for the run on liquidity, there's lots of times that relative equal highs and lows stay in the marketplace for a long time. That's not a secret recipe. That's just one piece, okay, or one component. You have to have the expectation the market's going to move higher or lower. Otherwise, those relative equal highs or lows stay in place, which is why the whole narrative of supply and demand or classic support and resistance even is in consideration ever. Because there's many times that the marketplace is held in consolidations or a range. And those ranges are defined by what? Highs and lows that are relatively equal to one another. So, in short, I am not convinced, nor do I believe that even after some period of difficult time trading, where the markets just do uncharacteristic things, and how long of an amount of time that's going to be, I don't know. And it may not do it, but I'm anticipating that. I'm preparing my psyche to expect that. And in that way, if I have to say, no, I'm not going to be trading for a couple months, then I'm not going to feel the impulse to want to do it just because I'm teaching you. Because I have other things I can teach you while we're in those environments. Because my belief is, and the faith in, I know how these people are going to go right back into doing the same thing they did before. It's like anything else. You know, when we had stock market crash in 1987, people wigged out. They're, oh man, I'm never going to do that again. I'm never going to invest in stocks. There's always a sucker. P.T. Barnum had it right. And all they have to do is create some stellar move. Look what they did with Bitcoin. It failed to do 20,000, crashed down to 3,000, and then they worked up a frenzy again. Why? Because it rallied so much. That's what they do. They draw a crowd with big price action movement. That excitement is like a carnival barker. Okay, they get out there and they say, come on, everybody get up here. Take a chance. You can knock this plate of, old milk bottles down with one throw of the ball. Come on, you can do it. And they do it, and it makes it look like it's easy. And everybody goes up there and they spend a quarter or a dollar or whatever it is to try to do it, and they fail. Because there's a sucker born every minute. So these markets are going to create that same environment. Now, why do I believe that even if we have a problem with the markets for a period of time, that they'll go back to doing what they're doing now? Because in their mind, they're thinking that the collective will be subordinate to them, and they will do whatever they say. And in their mind, they're going to allow large funds and things of that classification for trading, okay, to be participants of market moves again. And then the whole old paradigm kicks in again. And the whole process repeats itself because liquidity has to be provided on a very large scale. That's never going to change. It's not going to change. And that's why I'm telling you that even if they were to turn the markets off for a year, okay, entirely, like completely turn it off, I don't believe that's going to occur, so don't think it's what I'm thinking. But the equivalent to that would be me not trading for up to a year because the level of risk that's involved and such. And I'm specifically referring to Forex when I'm talking about this because commodities will move regardless. But Forex, I'm preparing myself to have a hiatus up to a year if it gets really ridiculous. And I don't want any of you to be taken back if I come out and say, a month or two from now when it starts getting silly, that, okay, I'm going to still talk about Forex, but I am not engaging at all. I don't want you to think that, ICT thinks that Forex is broken now or the algorithm is broken. These markets are going to book the same way they've always done. But I expect a great deal of volatility, manipulation, and periods of what they're going to call lack of liquidity, but it's just going to be them clearing the board, which induces fear. Okay? Just as easy as it is for them to incite greed with big moves in crypto and Bitcoin and such, look how easy it was. Everybody watched it crash, but then boom, now everybody wants a piece of the $100,000 Bitcoin, which again, I don't see that happening. I could be wrong. It could be months from now, weeks from now, and it could be at 100,000 and whatever. I don't care. I'm not ever trading it. Okay. I've made my mind up. I'm never going to do it. So I'm interested in real markets. Now, that may be taken by some of you that trade crypto. Oh, it is a real market. Okay. What I'm referring to is something I can grab and eat. That's a real market. Okay. Like grains, meats, foods. Okay. That is going to be the hot markets next year. And I really want to keep my focus undistracted as I'm doing my analysis, even my fundamental analysis on the crop reports and things like that, because I believe that that's where the huge moves are going to come next year. And either or, if it is in fact continued on the basis of them engineering a shortage by paying farmers to turn over their crops and not take them to market, and don't take my word for it, research it, because that's really what's going on. I have friends that do agricultural farming, and I've seen the letters. I've seen what they've been receiving. And I've seen the incentives that they've been trying to put on these farmers that gives them reason to want to even do it, which I can't imagine, like, what this is going to look like next year when they don't have anything because they've turned water off, they've turned the desire for the farmer to be able to continue growing. And it's parlaying into it's the perfect storm. And food is going to be, I mean, think about it, folks. I've told you this a year ago, and I've been telling you periodically throughout the months, prepare. Okay. Now even the news is talking about food shortages. And now we're entering that part where I told you it's coming. Everyone's going to do what they do when, like in the United States, well, at least the Mid-Atlantic states, if they talk about snow, you are not finding bread and milk anywhere. They immediately go out and they clean it all out. They make a run on the stores. And eggs, milk, and bread, they're gone. You can't find it anywhere. So now, because they are months into this, and now everybody's talking, and they all see it when you go to the grocery store, how easy is it for you to find good beef or chicken? Because I can tell you, I have to go around looking for it. Now, we have a couple ranchers in our area where if I want to go out and buy a half a cow, I can do that. I hope it doesn't get that bad, but that's one of the alternatives I've made preparations for. And having freezers on hand and things like that. But how hard is it for you to see that this is not a conjecture? Like, it's happening. And if they squeeze a little bit of the supply, and then they make everybody do what people do when they see inclement weather coming, they go out and they panic buy. And that panic buying will feed on itself, because what happens is someone's going to go to the grocery store at the end of the week with their paycheck and say, okay, I'm going to go buy my week's groceries, or I'll buy my month's groceries, or whatever it is their interval is. And they're going to walk into these stores and they're going to see the shelves are barren. The freezers and cold storage areas empty. They're going to be like, what is this? Where's all the food at? And then they're going to be asking questions. Oh, you didn't know? Yeah, there's a food shortage. And now they're going to be a mad dash for them to go around everywhere. And when this kicks off, and we're entering that stage right now, where everybody's talking about it. They're all expecting it too. They're just waiting for the first snowflake. Okay? And when that occurs, it's over. If you didn't get your stuff prepped, if you didn't get a freezer chest full of meats, chicken, and beef and such, you didn't buy canned goods and all those things, you will not be able to. Okay? It's going to be hard for you. And that stress is what I was trying to prevent. And this is not me fear-mongering. I'm not trying to get you all worked up. Because what am I going to gain from it? You've already paid me. I'm not selling you anything. I'm trying to give you a peace of mind that even if this doesn't get as bad as I think it will, you have food. You just won't have to go to the grocery stores as frequently until you use up what you have. Canned goods do not expire on the date that's stamped on them. As a reminder, because I had somebody send me a message in Telegram. Oh, I bought canned goods and they expired 6 months ago. Well, I don't know where you're at, but 6 months is nowhere near what you go to a grocery store in the U.S. I got canned goods that go out to 2023, like November 2023. And I'll tell you this, I will eat them as long as that can doesn't have any bloating or any discoloration or leaks. That's it. That food's going to be good. There's nothing wrong with that food. So we rotate our stock, and everything I use, I go back into the stores that week and I replenish it, and I keep that constantly going. And it takes a little bit of work and organization, but I'm taking it serious, folks. I don't want to be worrying about this. I have too many things. I have too many people like you all to be able to focus. And if I have to worry about feeding myself and feeding my family, I'm not going to be able to focus and do anything with you all here. I'm going to be a mess, like any father would, any husband, any family man would. And most people don't see these things coming. And I said this stuff on Twitter in 2019. Something bad's coming. And everybody laughed. I'm telling you, it's about to get really bad. Really, really bad. And I'm not exempt. Being wealthy does not exempt me. If I can't get replenished of what I use, I'm eventually going to be what everyone else is going to be. SOL. Okay? So the concern's real. I'm not scared, but the concern is there. And it would be highly irresponsible and selfish of me to not make a hard attempt to kind of like nudge you all to do it. And I know some of you can't do it as much as you would like to. Can't afford it. You're barely here anyway, making your monthly payments. But I don't have an answer for all of that. I don't claim to know everything, but if it's possible, do what you can. Sell what you can. Get an extra job, even if you got to do, Uber Eats, Grubhub, those types of things. I have friends that work professional jobs. They've been doing that just to get extra money to buy more stocks. Not stocks in the sense like, stocks in the New York exchange. I'm talking about food stocks, preps. So, not a lot of teaching here today. I know that probably doesn't whet your appetite, but this is what's on my mind. This is what I'm concerned about for all of you, not just myself. And everyone's getting quieted down and devoiced. I can't talk like this on YouTube because they'll take the channel away from me. I don't want to be on Twitter because they'll just censor me there like they did in the past. I'm not going to create an Instagram to talk about this stuff because they're removing people there too. So I was going to do it on SoundCloud, but all that's going to do is draw attention to myself, and they'll probably just take my platform on YouTube if I did it there too. So I talk to you all here. I say this here. For the majority of you that have contacted me and stated that, you've done what you could and you're thankful that you listened because you're seeing it where you are. Everywhere is going to have this problem. And some places are going to be harder hit than others. But it's not something that any of us are going to be able to say, well, I got plenty of money, I can weather it. Because plenty of money can't buy the things that aren't on the shelf. That's my point. Okay? So you need to take some time to think about what it is that you could do to prep your house, get some foodstuffs, and give yourself some insurance, okay, to have peace of mind and knowing that you can feed yourself. So, just as a reminder, let this, this move right here, it may not look like a lot to you because you weren't in that move. But be long in that without a stop. And when it's crashing down 100 points in minutes, that's $10,000, folks. That could be taken from you. Like that. And while I want all of you to be successful, I don't want any of you hurt. Which is the reason why I teach in a demo. This is why I do paper trades. Because I'm teaching you by example, to learn the skill set in a safe, closed circuit environment where nothing can be taken from you. When you learn how to do it, then you can decide to do this on your own in your own live accounts. But I'm not going to ever tell you that. All the responsibility is yours. And I'm teaching you how to think responsibly, not just in trading, but to preserve yourself from a mental standpoint and also from a humanistic standpoint. We are all affected by things that if we can't eat, if we can't stay healthy, all these are going to be impactful to our ability to be successful in this, in anything. But this requires a whole lot of focus. And if you're not focusing because you're under a lot of stress or fear, it's going to paralyze you. It doesn't matter how good you were in the past. If you don't have food in the cupboard and your kids are asking for something to eat and you can't give it to them, I don't ever want to be in that situation. I don't know how I could endure that. And I don't want any of you to have that situation either. But that's going to be it for today. It's nothing really educational except for, just as a reminder, look right on time. I'll talk to you tomorrow. Be safe.